A lot of people think getting a big refund means that is free money coming from the government, but really you have had money over withheld from your paychecks, or you have paid in estimated payments that were too large. You basically have given the government an interest-free loan over the past year.
Hello, and welcome to another episode of It Depends, a podcast series brought to you by Hantzmon Wiebel. You know that if you've ever talked to an accountant, they've told you, well, it depends. This podcast series is for business owners, leaders, operators, accountants, or someone just wanting to learn more about the accounting industry. I'm your host, Clarissa Hoffman. Welcome to today's episode where we're talking about busting tax myths. Today we're joined by Pam Wise. Welcome, Pam.
Thanks for having me.
Can you tell us a little bit about yourself?
I am a supervisor in the tax department here at Hantzmon Wiebel, and I've been here almost 5 years now.
Well, great. Thanks so much for joining us today. There are probably a lot of tax myths, but I think one of the biggest ones is that getting a refund is a good thing. Can you talk to us a little bit about that?
Well, it really depends. A lot of people think getting a big refund means that is free money coming from the government, but really you have had money over withheld from your paychecks, or you have paid in estimated payments that were too large. You basically have given the government an interest-free loan over the past year. So ideally, you should save that money for yourself. You should invest it and have that money work for you to either earn interest in a bank account.
And in some instances, it's more than a year, right? So in that case,
Exactly.
It's a compounded interest that you're missing out on.
Exactly.
What about filing an extension?
You can definitely file an extension. You need to file that before the filing deadline for individuals is April 15th usually, unless it falls on a weekend or holiday. However, filing an extension just extends the time that you can submit your paperwork and your tax return. It does not extend your payment date. So you need to remember to pay your taxes, if they have any due, by that filing date. You do not have an extra 6 months to pay the government. They will charge you interest or penalties if you do not pay enough in. So my suggestion would be to estimate your tax liability and make that payment on time.
When you file your extension. Great advice. What about the perception that students in particular don't need to file tax returns?
Yes, some people believe that because they don't work full-time, or maybe they have a part-time job, that they don't need to file. However, if there is a filing threshold. So for single filers, if you make that amount or more, you need to file. You're required to. However, you might also want to file if you've had taxes withheld from your paycheck, because by filing, you will get that refunded to you. And then other students are also eligible for refundable credits. So like the American Opportunity Credit, Earned Income Credit, they might be eligible for. They would want to file to get that money as well.
And those amounts are updated every year, so it's
Yes.
important to check the thresholds each year.
Yes.
Great advice. Any myths regarding charitable contributions?
Well, some people think that you can give money to whoever you want, and that is deductible on your tax return. However, especially in this year, you need to realize that contributions to political organizations or donations are not deductible. But you have to give charitable contributions to a qualified charity. The IRS actually has a search tool on their website if you're concerned about whether or not the charity you've given to is considered as qualified. Another one is people give money to individuals that they have needs. Unfortunately, those are not deductible.
So you're doing it from the goodness of your heart to help someone, but you do not receive a tax benefit for that.
Exactly. Also, you need to be aware that if you get a benefit from a charitable contribution, that amount is not deductible on your tax return. So if you receive tickets to a charity event, or you receive goods or services in exchange for your contribution, that amount is not deductible on your tax return.
And I think in a lot of cases, there are state tax credits available for making qualified contributions to charities, but that actually reduces your charitable deduction as well, and a lot of people don't know that.
Exactly. You have to itemize deductions in order to take those charitable deductions, so you have to remember that.
What about documentation for your charitable deductions?
You definitely want to keep receipts and any letters you've received from charities that document those contributions, especially if you've made over a $250 donation. Those receipts are required to be kept.
What about the myth that only high-earning taxpayers are audited?
Well, that is certainly true. Statistically higher number of them are audited because the potential for revenue for the IRS is higher. However, they are not the only people who are audited. Definitely, there are low-income earners who are audited, and the biggest triggers for an audit would be if there is a discrepancy on your tax return. So the IRS receives documents like W-2s and 1099s, and if the amount of income you've reported on your tax return doesn't match that might trigger an audit. So any mathematical errors might trigger an audit. If the amount of deductions is much larger in relation to your income, that can trigger an audit.
Well, thanks so much for this feedback, Pam. I know it'll be really useful to our listeners.
Definitely, you're welcome. Clarissa, what is the topic for the next podcast episode?
Well, it depends.
Sorry, I'm not supposed to laugh in response to that.